All right, everybody, we are back. Welcome back yet again to Blockhouse. I'm so grateful to be here with Alex and Neil. Thank you, gentlemen, for being here. Really, really grateful to get into it with the two of you.
Absolutely. Thanks for
Yeah,
having me.
I appreciate it.
Of course. So, before we kind of get into the swing of things, we'd love to just start it out with some intros about who you both are and what you're both building. So, Alex, why don't we kick it off with you? Please tell us about yourself and about Stacks.
Yeah. So I'm Alex Miller. I'm the CEO of Stacks Labs, which, as the name implies, is the labs company for the Stacks ecosystem. So we're kind of the oldest Bitcoin layer 2 out there. As I like to put it, our claim to fame is we did the only kind of SEC qualified Reg A offering for tokens. So we've been at this for a while, and we've really always been focused on how do we build an ecosystem with maximal trust? Because ultimately, we're really big believers in Bitcoin. We're really big believers in what it means to have this alternative financial system for it. That's what it brought me into it originally. And it's how do we make it faster? How do we make it easier? How do we expand the use cases? How do we bring it to more and more people? And I think the only way you can do that is with high trust, because of course, the real original innovation of Bitcoin is the decentralization of trust and what it provided there. And so I know we're going to talk a lot today about staking and how we make Bitcoin productive and all of that. And that's really what we're always just here to do, is how do we let Bitcoin as an L1 and an asset stay as simple and as trusted as possible for people, while bringing all kinds of additional functionality and capability and lowering the cost so as many as people as possible can use it.
Man, I love that. And I'm so grateful to be able to get into this together. And Neil, same question over to you. Would love to hear about you and Fireblocks and what you are building.
Yeah, really exciting times. I got to say, I've been at Fireblocks for about 5.5 years now, really focused on everything financial markets related. And so if you think about when I first joined, it was really heavily dominated in the crypto industry around institutional trading and a lot of different exchanges and startups that were popping up. And we've really transitioned now to a pretty wide swath of institutions that have stepped in globally. Think of the Bank of New York's of the world, all the way to the Revoluts and the new banks, and now the MoneyGrams and the Western Unions. And so when you think about from a Fireblocks perspective, what we're providing, it's really the back-end infrastructure and platform that allows these regulated financial institutions to build on-chain or blockchain-based products and services. And it's been a really exciting evolution over the last, like I said, 5.5 or so years. I spent just under 4 at Ripple prior to this, and about 10 in the sexy, exciting world of corporate treasury. So really saw a lot of the friction and inefficiencies that I'll say traditional market structure has brought to their core clients through those 10 years in the lens of FX, global liquidity management, and really everything risk management. And so said, hey, there's got to be a better solution here. Turns out there really is. We're really starting to see it scale. So similar to Alex, really excited for this conversation and to talk through what we're seeing out in the market and what's coming in the future.
I love it, man. And you made this transition so easy for me. I'm going to kick this one off to you first, Neil, because you guys have been ahead of the curve for a very long time. And as the institutional access comes on board for the industry, and as we're talking about Bitcoin in this regard, things have changed dramatically over the last few years. And you guys have been at the cutting edge of this, with major banks, asset managers increasingly supporting the asset. Owning Bitcoin and having functional Bitcoin markets are two very different things. And so I'm curious, from your perspective, what's still missing before Bitcoin has that same kind of financial infrastructure institutions expect, like other major assets?
Yeah, I think pun intended, we need some clarity here. At the end of the day, you can have ETFs that can get exposure to a certain asset that you may not be able to get direct access to. But in order for Bitcoin to really function in sort of its native state, which is actually on-chain capital markets and utility driven, you need the ability for institutions to be able to access this asset and leverage the utility that it ultimately can provide. And so it needs to be treated the same as every other asset that's out there in a regulated financial markets way. I think we're starting to get there. Again, ETFs were a great unlock in terms of getting institutional exposure to a lot of people, but now we actually need to derive institutional utility for Bitcoin. And until we have real guardrails and guidance for that can allow these institutions to participate more directly, build out derivatives, lending markets around it, we're really sort of stuck in this little waiting area, gray area. So hopefully we have that to come. I do know that I'm not obviously a policy expert in any way, but I do know that we're starting to see a little more structure from the various bodies here in the U.S. as well. So even if we don't necessarily get a full Clarity Act passed this year, I think we'll start to see at least some structure and framework from the various regulatory bodies that will at least get us continuing on in the right direction.
No, completely agreed. And shout out to all the trade associations that are working hard to help us get Clarity Act passed, like the Chamber, Blockchain Association, and the Crypto Council for Innovation. Really appreciate the work they're all doing. And Alex, I'd love to hear your perspective on this as well. Obviously, this is paramount in what you all are doing at Stacks.
Yeah. Yeah, I think, as good an asset as Bitcoin's been for a while and as stable and kind of trusted is, at least on a relative basis to crypto, most, especially if you're going to be doing it in size, if you're an organization, there's a lot of infrastructure that you need on it, right? And so we saw, even going back 10 years, right? You started to get much more reliable exchanges. You started to get reliable custody providers out there, but you need people who can do more and more and more than that, right? You need, if you're going to interact online, most are not going to just like transfer it into a multi-sig or something and actually like interact directly on it. And frankly, even if you want to, there's not that many Bitcoin wallets that support like dApps and things like that, right? There's a couple actually like Xverse and Lether that started in the Stacks ecosystem and also support Bitcoin and added a lot of programmability, especially back in 2023 when ordinals came out. But you really need those layers because I think ultimately most large corporations are going to be very, very risk averse, especially when it comes to losing Bitcoin, right? Like it's one of those funny things where you might have a very good risk tolerance when it comes to like the types of investments that you make. And, hey, all right, we took a risk on something. We didn't make the money on it. We lost whatever. That happens. But like nobody excuses losing your money through like incompetence or accident or theft or whatever, right? It's like you had one job. Do not let the money get taken for like a dumb reason on it. Even as Bitcoin has become more and more trusted as an asset and people are comfortable with the financial exposure of it, that's very different than being comfortable with like the logistical exposure to it. And so I think that is something where like folks like Fireblocks, let's say, make a huge, huge difference in the ecosystem. And the growth there, I think, is reflective of that because and at the same time, letting people come in and do things like the ETFs where it's like it's a structure that you really know and see. And this is the same reason that we see, folks like Custodia Bank who are really trying to like push and say like, hey, let us have bank charters. Let's let banks actually custody digital assets because that is a relationship that a lot of folks are very comfortable with and will do. And of course, that's also part of the reason you see a lot of people fighting against that is I think there's a lot of people who aren't even necessarily think it's going to implode a bank, but they don't want to see crypto more successful. They don't want to see it bigger. And so they want to block anything that helps make it come into the mainstream more. So those types of advancements are continuing to happen. I think really important. They need that infrastructure. And it's part of the reason, like with Stacks, for instance, that we want to, yes, obviously make it both cheaper and easier for people to use Bitcoin, but especially to produce things that are understandable for large institutions all the way down to the smallest individual investors, right? What are the things that we can make that sort of work across the board for everybody? Because if you don't give them like assets and products and capabilities and structures that are understandable and fit into the risk management frameworks that they have, they're not going to do it.
No, it's a great point. And thank goodness that we have, like you made such a valid point about there's concentrated lobbying efforts to try to stop this adoption from happening. So thank goodness we have things like, whether it be Ripple or Coinbase. We're talking with Anchorage and Plume later today about some of the lobbying that's happening in the industry. Grateful that we have people that are championing this on the Hill. And you made a valid, amazing point, Alex, that I want to segue with, which is, Bitcoin is obviously the biggest asset in our industry, but it's still very largely disconnected from the rest of on-chain finance. And I think this is, something you all have been very instrumental in. Why do you think it's taken so long for this to change? And what actually do you think changes once it's properly connected?
Yeah. So obviously the biggest challenge has been the fact that Bitcoin's not programmable, right? Like there's no smart contract capability. There's no, you've got some very basic stuff with like taproot contracts and things on it, but it's really, really limited on it. And again, that's not necessarily a bad thing, right? You'll see a lot of people talking about, how much functionality and capability they want. You obviously have constant BIP fights over people. Personally, I think actually keeping Bitcoin relatively simple at the base layer is a good thing, right? There's a lot of people who have built a lot on top of it. A lot of the trust is earned because it is so simple, right? One of my favorite things, even if you go back and you look at the original Bitcoin white paper, it is so simple and easy to understand for everyone. It's obviously a lot of very big ideas to it, and a lot of technical implementation had to still come along. But I think actually the simplicity of Bitcoin literally goes back to that kind of original ethos of it. So the trade-off to that is, though, that like you don't have smart contracts, right? You can't do a lot of very more intelligent things trustlessly on top of Bitcoin on the same way that you can on Ethereum or other languages that have come since, right? They've gotten the benefit of being able to see, okay, hey, what did Bitcoin do right? And they only have to focus on like the incremental part over it. So that's the reason, for instance, with Stacks that we're taking the approach we do as a layer 2, right? Okay, let's leave that real trust, settle all of the transactions back to Bitcoin so that like the chain's not going to get reorged because you'd have to reorganize Bitcoin in order to do that. But add the additional programmability where on a layer where you can move faster, you can do things more differently, you can add more complexity to it because you know that the base layer is really simple and really secure to it. But that is something that really made getting some of the financialization and some of these additional assets on top, because ultimately for most things that you would want to do on top of Bitcoin when it comes to especially these more complex deals and automatedly executing things, you have to move your Bitcoin into someone else's custody, right? Because the only way to do it is for whoever is going to execute those trades. Since the chain can't do it itself with a smart contract, it has to go to someone who can do it. And that means trusting that person with your assets, which is a really big lift, right? It's a reason why I think there's far more off-chain lending against Bitcoin than there is on-chain lending. Because again, it goes back to those risk management frameworks and what people know and what they understand, what they're comfortable with, right? It's actually really easy to get someone who runs hundreds of millions or billions of dollars to say like, hey, let's make a tri-party wallet with, a trusted third party, you and the lender, and if the loan covenants are breached, we'll sweep it out and it'll go into a different account. It's like, okay, cool. I understand how to do that because I've taken 14 other types of loans against other assets using that framework on it. If you really want to be able to scale it down too and do things in smaller sizes and with more capability, you've got to have the trustless programming thing. So, with Stacks, we just launched Bitcoin staking last week. I know we'll talk some more about it, or we announced it actually before that. We did our hard fork that's going to enable it. So it'll be available as a full product in the coming weeks. But the reason we did that is we said, what's the number one thing people care about? And the number one thing they care about is, I don't want my Bitcoin leaving my keys. I want to be able to have control over it, whether that's in my own self-custody, whether that's through a qualified custodian like Fireblocks. They want it somewhere that they know and they trust and they can hold it, and enabling that kind of thing while still giving functionality. That is the thing that's been really hard to do with Bitcoin. It's where we put a lot of our effort and our work, and it's somewhere that's where all the advancements going to have to keep going if we want Bitcoin to have that same capability that you see in other places.
Man, that was such a wonderful answer, and you gave me such great transitions, both on the trusted custodian side, but also on the staking side. I want to briefly touch on one point you made and pass this to you, Neil. Something that Alex had mentioned is Fireblocks clients can already access Bitcoin lending and yield directly from their existing custody console. No new wallets, they don't give up their keys, and I'm curious, like, what actually has to exist at the protocol level and at the custody level for institutions to trust that kind of access?
Yeah, I think part of the gap that we have right now is if we look at traditional institutional markets, there's very structured, understood, and defined risks that people need to track and manage against. You have settlement risk and counterparty risk. We now have a whole new realm of technology risk that needs to get assessed and addressed. And the first one is the wallet. How do you address the risk of private key management? How do you select a vendor or a provider who is going to either hold the assets on your behalf and run the keys and manage the keys? Or how do you determine the provider who can provide you with the technology to actually run and manage your own wallets? And then once you get to that layer and understanding, which is where we're starting to see the institutions actually step in, figure out how to do this more directly themselves, it's then a question of what is the technology risk associated with interacting with not a direct centralized counterparty, but a decentralized protocol? How do you then run audits, assess risk on, hey, I'm going to tap into this smart contract and I'm going to pledge my Bitcoin or other asset so that I can now lend against it? These frameworks don't exist in the traditional world. And it's been actually a lot of fun to be at Fireblocks because we're working with the ethos of crypto, not your keys, not your coins. 90% of our customers 5 years ago were saying, we're going to have just peer-to-peer, wallet-to-wallet transactions in the next 3 to 5 years, and all assets are going to be on chain. And then we're now starting to get the traditional institutions stepping in to say, well, hey, no, we're still going to service 90% of the population here, but we're going to be able to do it in a better, faster, cheaper way. It's now really an understanding because, Alex, obviously everything that you guys have built, everything that Fireblocks has done in connecting this ecosystem together is step one. It's now to bring the rest of the traditional world along to now understand what all of this is and what it means. And so I think there's probably a lot of money to be made in sort of the audit world and going out to these institutions to say, here's how you assess technology risk in the context of, again, not just private key and wallet management, but everything that you're ultimately going to be interacting with, because there is a world in the future. I don't know if it's 5, 10, 50 years from now where everything is truly decentralized, but we're starting to see a lot of other assets now coming on chain. And there's a pretty big wave of or narrative around FX and stablecoins. We're seeing stablecoins scale from a payments perspective. Live my life in liquidity management before this. There's real disruption that can happen in cross-border payments. There's more disruption that can happen in FX. And if you can start to get institutional FX coming on chain, having the ability to have permissioned AMMs and pools around that, there's so much utility that can be derived. But again, we need to have the controls, policies, and frameworks in place. It'll get proven down market with the innovators and the folks that are really pushing the envelope. They are then ultimately the ones that will prove out the model that gets repurposed in some ways for the more traditional institutions to step in and scale it. We've seen it in all the cycles we've had with crypto over the years, DeFi summer, NFTs, this, that, and the other. Like, we're seeing DeFi proven. NFTs will have some form of utility, soul-bound tokens. A lot of disruption you can have in insurance, as an example, with policies. And it's just a whole host of use cases and applications for everything that the innovators have proven over the years and will continue to do so. It's just a question of who's going to adopt it, when, and how.
Man, I hope people are watching this. You guys are killing it right now. You brought up a great point about innovation, and Alex, I'm going to pass this one to you because I know you had made a mention before how you guys are innovating, like laying the foundation for Bitcoin staking. And Bitcoin itself, as you've mentioned as well, it doesn't have a native staking mechanism. So I'm curious, what does it mean to stake Bitcoin, and what had to be solved before you all could make this possible? Without having to ask institutions, for example, to give up custody of their Bitcoin.
Yeah, so you've seen a lot of people talk about different forms of Bitcoin staking over time, and you're never going to really, I think, see Bitcoin staking for securing the Bitcoin network, right? Bitcoin is secured purely through a straight proof of work mechanism. In our case, Stacks is secured through what we call a proof of transfer mechanism, where all of the transactions settle back to the Bitcoin network. Stacks miners bid Bitcoin in order to win the Stacks block. So there's this really inherent tie between the two. And what we sat down about a year ago and we're saying is, okay, how can we let Bitcoin holders participate more directly in that? Because people who held Stacks already acted as validators on the Stacks network and were earning Bitcoin. That's actually the really cool part. Because of how proof of transfer works, you have all this Bitcoin that's generated from mining, from the miners, and that's getting paid out to people holding STX that's locked in the validation process and signing transactions. That's also how we managed to lower transaction times or block times from 10 minutes, air quotes, on Bitcoin to, sub 5 seconds on Stacks. But we said, let's bring Bitcoin into this too. And the way we found to do that is by using Bitcoin to provide economic security on stacks too, right? So Bitcoin's not directly participating in the signing, but if you bring Bitcoin and a very small, about 5% stacks position to it, you can earn a 3% yield on your Bitcoin. And where that Bitcoin comes from is natively, again, in that stacks mining process. So all the stacks miners bid Bitcoin. That Bitcoin then runs through the mining process and gets paid out to people who are holding Bitcoin or holding stacks as part of the process. And our goal, ultimately, building this giant economic system, you need a lot of economic security for that system to do it. And so all we say to Bitcoin holders is like, you only have to do two things, right? You have to lock your Bitcoin and you can actually redeem it at any time within a few blocks. So you always kind of have access to it. But again, more importantly, it's in your own wallet. It's on your own qualified custodian. You don't have to take that risk with it. And then you, alongside it, hold about 5% stacks. That gives you also, obviously, the investment in the stacks network. And then you participate, you delegate it to a signer, you stake it with one of our signers or run your own. And now you're helping validate the transactions on the network. So you're providing the economic security, you're helping sign transactions, but you're not having to take risk with that asset that you really care about and that's really important to you. In exchange, like I said, you're going to earn about a 3% yield on an annual basis against your Bitcoin, which otherwise would just kind of be sitting there. We already know we can extend this further, right? So one of the really cool things that we're already working on looking at is, what if you could also take loans against that Bitcoin at the same time that it is locked in consensus? So you are paying, to borrow it, but you're actually earning so much against it, most likely, especially when you look at coverage ratios, right? You're not going to take certainly not more than 50%, but most people don't want to take more than 20 to 25% loan to value against their Bitcoin. But if you're earning 3% against all your Bitcoin and you're paying 6-7% against the 20% you're borrowing, you're actually making money while taking a loan against it and getting liquid on it. And I think that kind of thing is what really enables a lot of very productive uses of Bitcoin, makes it that much easier for people to be able to hold on to it, participate on it, and ultimately create the expansion of that asset, which provides that kind of competition to the rest of the financial system that exists today.
Man, I love that. And briefly, I wanted to ask you too. You made a point about speed, and I'm curious. You talked about how you're going to bring Bitcoin transactions down from that 10-minute settlement cycle you mentioned towards 5-second blocks. How does that? And that's
Yeah, so
amazing.
you can do that using SBTC, which is kind of the stacks bridged version, secured by a large decentralized signer network of really high reputation signers. The way you do it is basically you use this proof of transfer mechanism, which uses validation in between each Bitcoin block. So it's sort of like this hybrid proof of stake, proof of work network where you're trusting the Stacks network and the Stacks signers in between each Bitcoin block. But as soon as a Bitcoin block hits, all of those transactions are hashed and written into that Bitcoin block. And so you can't reorganize the Stacks network without also reorganizing Bitcoin in it. And so it kind of gives you the best of both worlds there, the ability to balance on them too. And so we think that's it's a really powerful dynamic. We've seen people doing it. You've got DEXs, you've got all kinds of earning protocols and things on stacks where you can be using that. And that's ultimately the goal is look, we know that Bitcoin is going to stay relatively in the technical design that it is now. Obviously, I think at some point we're going to get a quantum upgrade. I'm sure there'll be plenty of fights over what exactly that looks like. But, we fought the block size wars. We fought a lot of things. We're not going to see Bitcoin get to the point where it can do 50 or 100,000 transactions a block, or where the block times are 5 seconds or something. And that's fine. If you think of Bitcoin as the digital gold or the asset that's underlying thing, it doesn't actually have to be that much faster than it. But you also can't expect it to scale and become like the basis of a global financial system if only 4,000 transactions per block can happen every 10 minutes. There has to be a way to scale and layer it on top of there. And we think that stacks, the design of stacks that we've done with that pairing, still giving the greater speed and capabilities, but keeping the pairing really close, keeping the security really close, is kind of the ideal way to achieve that balance.
Man, I love that. I appreciate that, and thank you for answering it. And Neil, on the Fireblock side, something that Alex had mentioned as well is we're starting to see on the custody side, the lending, staking, stablecoins, and settlement infrastructure. All this is coming together around Bitcoin. And so I'm curious, which piece is the real unlock for you for Bitcoin capital markets? Which piece do you think the market is still underestimating?
Yeah, honestly, I think you'd mentioned there's a convergence there. That's exactly what's happening. I don't know that there's one specific catalyst out of that. I think they're all going to sort of prove their own way to convergence, and what that convergence in my mind is capital markets on chain. Bitcoin as that base asset. We look at, and we're not going to go down a monetary policy macro deep dive here, but happy to do that in a follow up at some point. I love that stuff, but if you look at the dollar as the reserve asset globally, all markets revolve around that. If you look at blockchain based markets, historically, since the beginning of blockchain, it's all revolved around Bitcoin. We now have a fundamental question to ask is what is that reserve asset for global markets in the future? We're seeing stable coins unlocked. We're seeing Genius Act, hopefully clarity again, coming down in the next little while that will ultimately allow for dollars to come on chain. We'll see other currencies come on chain as well. Is the dollar going to ultimately be the base asset for blockchain based markets? And is that now going to be the underlying settlement layer for any asset that gets moved on chain? Is Bitcoin going to start to eat into that? But all of those different use cases, applications of the technology, ultimately of Bitcoin itself, moving into a more prominent space in the broader scope of capital markets and financial markets, I think is really critical. The convergence of all of those different use cases. We a couple of weeks ago were part of the DTCC pilot. If you guys saw that, which was super exciting. 12 but regulated financial institutions in a production environment, moving treasuries, moving tokenized equities that now have the ability to actually access this and prove again the model. As we get those online, as we prove the utility and continue to scale stable coins as the settlement layer, that's all going to come together. And it's then a question of how does the globalization of that and access to financial markets more globally start to enable it? Because again, you look at more of the macro view of this, I think a lot of people see the US and US capital markets as, hey, it's kind of good enough. But what they don't realize is that everybody offshore cannot access that in an efficient way unless you're in the top 3%. And so I think this unlock, getting assets out there, getting people access to financial markets, financial inclusion, why we're seeing a lot of neobanks and fintech stepping into this space is because they know that there's a gap in underserved or just people that are not served by financial institutions today. And you can hate it all you want. The world needs to revolve around some sort of base asset to exchange value. And whatever that is in the future, I truly believe it's gonna run on chain in a lot of different ways in a lot of different markets. And again, I think we're just really at the beginning of that convergence, but we're gonna really start to see it accelerate over the next couple of years.
Man, what an amazing answer. And I wish we had known each other before. 'Cause we have this great regulatory talk coming later today. I would love to have you on it. But
I don't know if the Fireblocks team wants me talking about the regulatory side. I don't really have a filter at times. So
Ne next time, we'll vet it with through the comms team. I love it, man, and, I know you guys are really busy, and I really appreciate both your time. I have one final question for you guys. Neil, I'll kick it off to you first, and, thank you both again so much for coming, but, before we end out, just what are you guys most excited about, both for your teams and, what's going on in the industry for the second half of 2026?
yeah, I think honestly, just the continued acceleration of adoption and convergence. We're starting to see a lot of regulated institutions stepping in. Again, this is the way that we get scale. A lot of maximalists back in the day said, we don't want government involved. We don't want financial institutions involved. That's the only way that this scales. And we've moved beyond just Bitcoin. Bitcoin itself is an incredible asset, and it's something that I think will be around for decades to come. But this blockchain technology is truly transformational. And that's a lot of what Fireblocks is working on, is to say, how do we get these tools in front of institutions to really transform industries that run very manual, inefficient, opaque, decades old systems today and technologies. How can we get them to leapfrog and actually jump in and start to scale? So I think as we start to see new use cases and entrants into this space, that's really the most exciting part. Most exciting part of my job anyway is to see the new novel use cases and things that people are coming up with, because I think everything is ripe for disruption out there. If you know, it's all a shit show, if I'm allowed to say that on here.
Of course you are, and I couldn't agree more. I appreciate that, man. And Alex, over to you. Same
I said,
question.
Neil, I thought this was family friendly programming here, Neil. Come on, man. No,
My bad.
I'm
I told next time I'll be good.
okay. Promise. Yeah, no. The obviously first and most excited for the unbelievable growth of Bitcoin staking on Stacks that we're about to see. More than I think, we've obviously been going through a very long, weird year kind of for crypto. It's been up, down, all around. I think you've seen a lot of signs. You can do a lot of reading on why I think we're coming kind of to the end of what I think that is. And it's hopefully looking to a little more stable and continual growth. And I think the thing that's really nice to know is like there has been so much adoption by the traditional financial industry, by new entrants coming in, new folks doing it, that it really gives that solid base for the next generation of growth on it and what the next cycle of it looks like. The funny part is I don't know exactly what it is going to look like, right? We're coming up on almost 4 years. Well, we're 3.5 years since the original launch of Ordinals, which really kind of kicked off the last round of growth and the idea of building on Bitcoin. What's the next cycle look like? What's the really big thing that's a part of it? I don't know exactly. I think it probably does have to do with the continued development of like some new products and things like staking on it. But whatever it is, I think we're right on the cusp of that. I'm really excited to see it and see what folks kind of are coming up with, who comes into it next. And yeah, it's going to be an exciting time for Bitcoin.
Guys, this was a absolute pleasure. Thank you both so much for coming, and I really look forward to doing this again because I have so many questions I didn't get to ask. But really appreciate you guys and amazing, and thank you again. Really appreciate it.
Absolutely, this is great. Thanks for having us.
Anytime. Appreciate it. Thank you guys.